Good morning, everyone. One more time, Marlene Gonzalez with Canvas Real Estate in the beautiful town of Miami Lakes. Today, we're honored to have Ray Palacios and Austin Palacios from First Origin Mortgage Lenders, our preferred in-house lenders at the Miami Lakes office. Okay, just want to make sure I stress that. Okay, even though I know you work with many other real estate companies, so I'm honored that they decided to work with us. And today's class was a special request on my part. I think it's important that agents understand the underwriting process of a loan. It doesn't happen magically. There's a lot of components, and the synergy between the lender and the realtor has to be intact in order to make it happen, because stumbling blocks are going to come around at some point in time. And when you can just pick up the phone and get that response from that lender 7 days a week, it makes a difference. So here at Canvas Real Estate Miami Lakes, we have a preferred, awesome in-house lender that I'm sure they're going to tell you a little bit about them. And then we're going to go into the class of the underwriting process. Okay. So I'm going to turn the table over to them. We're going to share the screen. Well, we can share the screen already, right? And where's your presentation?
No, let me see. Yeah, start doing stuff so it comes out.
Okay. Well, we could just share it and then you can find it if you like. Okay, don't worry. Let's share it and then you find it on your computer.
There you go.
There you go. There it is. Cool. Okay, so let me go ahead. Okay, we got to get somebody to be on mute. Andrea, let's mute. Okay. Okay, everybody else is muted except us, I hope. Okay, so here you go. Let's switch this down on this side so you can get started. So I'm going to turn the floor over to you guys, okay?
Absolutely.
All right, guys. Well, welcome to today's class. I know that we are going to be talking about the underwriting process, what we go through, what we can ask of you guys to help us with. One of the things that that I did want to mention before we get into the underwriting class, that there is a new product that we just started on Monday that's called Conventional 100. So now the conventional side has 100% financing.
Wow, are you
Yes.
probably one of the first or the only lender in South Florida doing this?
Yes, we are one of the few lenders doing both FHA 100 and Conventional 100. So I did set up a couple of bullet points on this one. You can call us for any additional information on Conventional 100. It's going to be a hugely popular program, and probably, in our opinion, it is a lot better than FHA, because you can do Conventional 100. Technically, it's up to 500,000 that the 100% financing happens, because we can give you up to $15,000 down payment assistance with a second lien that we will fund as well at 0%. So the second lien is 0%, due in 30. It's almost like the hometown heroes. But we're going ahead and we're funding this, along with a couple of our investor partners. So it is only on 3% and 5% down payments. So it is for first-time home buyers. At least one person on the loan has to be a first-time home buyer. So if you do have 2 borrowers or 3 borrowers, not all of them need to be first-time home buyers. Just one of them do. And they do need to have a 700 or more credit score. Now, there are some restrictions. If they have under a 700 score, they have to fall within income guidelines, and there are income limits under 700, which most of South Florida will probably not qualify for anything above $400,000 or $500,000 of a loan. So that's why we're portraying this with 700 score or more, and there are no income limits. Really the only thing we have to look at is whether they are a first-time home buyer. And a first-time home buyer doesn't necessarily mean that they've never owned a house. It just means that they have not owned a house in the last 3 years. Okay, so they might have had something 4 or 5 years ago, they sold it, and now, you know, we consider them a first-time home buyer all over again. So if they are doing a 20% down, obviously, you know, it's up to a $15,000 down payment assistance. So if for instance, they're buying something at $515,000 purchase price, and 3% down is $15,000, we give them the $15,000 down payment assistance. It's a 3% conventional loan. And guess what? It's 100% financing at that point. So that's why we say it's up to 500,000. However, if for instance they're buying a $750,000 property, and they are putting they are a first-time home buyer, and they can qualify for the 3% down payment, we can also qualify them for that 15% or $15,000 down payment assistance to help out with the down payment. Obviously, 3% of $750,000 is going to be $22,500, but we'll credit them $15,000 towards that $22,500 down payment money. So they'll pretty much just come in with closing costs plus $7,500. The way this one is a lot better than the FHA 100, the rate on the FHA 100 is about 1% higher than the normal FHA rate. The normal standard FHA rate right now for us is about 6.75 on a standard FHA, 3.5% down. That FHA 100, the rate would start at about 7.75. And then the second lien FHA does it at 2% higher at a 10-year term. This the conventional 100, the rate starts at 6.99. So the rate is actually a lot lower than the FHA. And then the second lien has a 0% interest rate. It's just like Hometown Heroes. You just have to pay it back within 30 years. So if you refinance, there's no payment or anything like that. So you refinance or you sell the property, it will have to get paid back. That's the only thing. All right, so those are, you know, the primary things on this conventional 100. I know that you know, I wanted to get it out to you guys. You are the first ones that are hearing it from us.
Yeah.
So we are gonna start. Yeah, so it is available to you guys ASAP, basically starting 2 days ago. We're gonna have it all over our Instagram and all over our marketing materials going forward. So it is gonna be a very popular program.
I have a question. Do both buyers have to have a 700 credit score?
Unfortunately, yes.
Okay.
Yes, because we do in the mortgage side, we do use the lower of all the credit scores, middle score. So if you have 3 borrowers, they all have to be over 700. If there's one, it's over 700. So if there's 3 borrowers and 2 of them have 700 and 1 of them has a 680, we have to use the lower of the 3.
Got it. So they all have to have 700.
Right.
Yeah.
So yeah, but nowadays we have a credit repair guy that's in-house, and he works wonders. He just fixed one of our borrowers from a 580 and got him to a 720. So
Wow.
yeah,
That is unheard of.
yeah.
Okay.
And all in 45 days. They didn't have to wait 12 months or 6 months. He works pretty fast, and he'll let you know right away what the expectation is. Right.
Interesting.
So-
And the ratios, do they vary when it's a 100% financing?
So the ratios are a little tighter always on the conventional side than the FHA side. So the conventional 100, the rule of thumb is that debt to income ratio will be capped at 45%. There will be some exceptions all the way up to 49.99%, but those are going to be far and few between. So we'll have to run it through the DU system, through Fannie Mae system, make sure we get an actual DU approval. And if it tells us that we're approved for the conventional 100, then
But
we're
what
fine.
is it again?
The DU approval?
No, the ratio.
The ratio would be 45% back end debt to income ratio.
Okay.
Yeah.
Whereas when we did that FHA recently, it was
56.99. Yeah. So FHA does go all the way to 56.99, even on their 100%.
45, 56. Got it.
Right.
Okay.
So yeah. But it is going to be a wonderful product, and these, you know, the current loan limit for conventional for Miami-Dade, Broward, and West Palm, I believe off the top of my head, it's about 766,000. So it could be an $800,000 purchase with 5% down, and you'll get 15,000 cash back. You know.
And this slide by itself is catered to South Florida, but I know realtors like Carlos that lives, you know, in a little bit north of here doesn't like this doesn't really apply to him because he can do this program because those people are fit within those income limits.
Right.
Yeah, so they don't even have to be a first-time home buyer if they fit within those income limits.
Right.
That's really good.
Yeah.
Yeah.
So for Carlos that he lives, was it Fort Myers or Lehigh or something like that now?
Yeah, in
He's
Punta
gonna
Gorda.
Yeah, he's gonna be good.
Enjoying the life in Punta Gorda now.
He's gonna be good doing this program because a lot of them are gonna fit those income limits.
Yeah.
Yeah.
So that's just a little gist of that. Call us if you have any questions later on, and then I guess we will go on to our standard presentation. So the underwriting process. These are a few things that we're going to be talking about today. Why it takes so long, and who's involved, and both of those will pretty much be on one slide, because the next slide you're going to see right away why it does take so long and who is involved all in one slide. And then we're also gonna tell you what we do to expedite and what you can also do to help the process out as well. So we'll go to the next slide, and there you go. See, as you can see, there are a lot of people with their hand in the cookie jar when it comes to one loan transaction. So when you guys go out there, you show houses, you write an offer up. I mean, I know it takes you a while to get that offer, but you're dealing with one buyer, one offer. You got to make sure that their inspections are done within the first 7 to 10 days. And then pretty much the only other thing you need to worry about is, will we get our job done by the end of that approval contingency period on page 2 of your contract. And then from then on, once we get our stuff done, which entails all of these guys, you know, put together and coordination of all of these people, then you have nothing to worry about. Now, one disclaimer, and I've been doing this for 30 years, and I tell every realtor this because I speak to listing agents all the time. Oh, why is it taking so long? And we don't throw our buyers or your buyers and our borrowers under the bus. So we will never tell a listing agent, oh, we're taking a long time because they haven't filed their taxes, or we had to fix their credit, or we had to do this, because there are a lot of times where buyers are in a hurry, and they're a little, in Spanish, desesperado. And we tell them what they need to do to fix their credit, or to maybe file their taxes correctly, things like that. And that's what, you know, there are certain things that they might need to do before they should be getting into a contract or an application period with us. And they're asking us for an approval letter anyway, and sometimes we do give it. This happens very few times, but it does happen. And then a week later, before they've even started fixing credit or filing taxes or getting their assets in a row so that we don't have any issues with gifts or assets or anything like that, all of a sudden 2-3 days later they have an executed contract, and now we're on the gun here, and we need to close in 30 days. And there are so the disclaimer is, we are only as fast as our borrowers, because my girls, my underwriters, my processors, they're good at what they do. They have a system in place. They are very coordinated in what they do as far as the submissions, the coordination with insurance companies and title companies and appraisers and our vendors and stuff like that. But let's say if we do have a borrower that we told them that they needed to refinance a car out of their name, and now we're waiting for another bank to refinance their wife's car into the wife's name so that it won't be on our debt to income ratios. There are certain issues with them that are not even listed here, that are outside of our control. And of course we have to make you guys look pretty. We have to make our borrowers look pretty. And help you guys out and get your extensions if we might need to at the end of the day, you know, whenever needed. So things like that, you know, I always tell everybody we're only as fast as our borrowers, and it's not because of you or us or anything like that, because all of you have been amazing in the help that we've received in the loans, the few loans that we've done in the last couple of months. I know we closed one with Marlene recently, and Marlene is very involved, and even as involved as Marlene is, we were still waiting for the IRS transcripts because they filed their taxes late, and then they didn't pay for the taxes, so we needed receipts of them paying their income taxes. Otherwise, it was an FHA deal, and we can't pay those taxes at closing.
And they needed to do a payment plan
Yeah,
with
Yeah.
the IRS, which
right.
I was surprised. I thought payment plans would take several weeks, a couple of weeks, whatever, to be approved.
Right,
And now I guess it's all automated.
right.
They approved them immediately and they deducted their bank account immediately, the first payment, which was cool. But that was interesting that the system is becoming more automated
Yeah,
right.
as before, that you would have to call, you would have to fill out this form, send in all this documentation, et cetera, et cetera.
Yes, yes. But obviously, the first thing in the underwriting process is that we as loan officers or any of my loan officers collect as much information as possible ahead of time and have everything as accurate as possible in the pre-approval application prior to this. That helps out a lot. But in the underwriting process, that initial application is key. Obviously, in your contract, you need to have it done within the first 5 days, calendar days of that contract being approved. So that application needs to be done
ASAP.
Right. And we're hoping that these borrowers or buyers have access to technology, because that is unfortunately one constraint. Is a lot of them don't know how to use their phones, don't know how to use the internet, can't print, have no printer at home, things like that. And then we do welcome them to come into our office, and we help them out, and we'll log into their account if they need to, and we'll print out anything in our office as well. So that application is key at the beginning. Those first 5 days, I mean, generally within the first 2 days, we try to get that application out to that borrower. So within 48 hours, they'll be getting that application, because our time frame is within the 5 days, we want to be ordering an appraisal. And we technically cannot order an appraisal unless we have a signed application and quote unquote an intent to proceed. There is one disclosure in there that's called the intent to proceed. So we need to have that signed by the borrowers in order for us to even order an appraisal. So a lot of times it'll be day one, and we'll have realtors calling us saying, "Hey, can you order the appraisal today?" And I'm like, "Hey, wait, I'm still gathering a couple of the minor details that the buyer is getting me. I need their bank account numbers, stuff like that, and their updated balances, the exact positions, because sometimes, listen, I might be out and about at 8 o'clock at night or something like that, out to dinner, and I'll get you guys an approval based on what we call a skinny file. I try to enter the basic information into our application system, so I can get you a DU approval or get you a written approval out there at 8, 9, 10 o'clock at night. And I've done that for a few of you. But that doesn't mean that I have the entire application ready to go. So you get me an executed contract, and you're asking me if I can order that same day. A couple of things need to happen. Number one is I need to fill out the complete application, and I need them to get it signed before I can even submit for the appraisal order. And that is by regulation. So I have to have that intent to proceed and a signed 1003, which is a signed loan application, prior to us ordering the appraisal. Otherwise, that appraisal will be no good. And we did run into, when that regulation first started several years ago, we ran into issues where my guys were ordering appraisal the same day, and then the application was dated the next day, and then we pretty much had to spend money on a whole new appraisal. So because it would have been, it's against the Real Estate Settlement Protection Act. So yeah, so within the 2 days application, within 5 days, we are already going ahead and ordering that appraisal. Also within the first 5 days, we are communicating with your title company, because in order for our file to hit my processor, or my underwriter, I'm sorry, my processor is reaching out to the title company, and the title company has to get us the preliminary fees for that exact transaction. And why we need that is, 10 years ago or 12 years ago, when they came out with these new set of regulations, they basically determined that if we disclose the wrong amounts, and they are too low on our loan estimate, and then we go to the title company, and at closing, the title company's fees are even a few $100, let's say $200 higher, there is a zero tolerance for an increase in fees for 80 or 90% of those fees. So that zero tolerance, if there is an increase in fees, we as a lender have to eat those fees. Whatever we disclose is whatever it has to be. So a lot of those fees are a zero tolerance, and that's why at the beginning we reach out to the title company, hey, send us your fee sheet for this transaction, and the title company has to send us pretty much what a closing disclosure would look like with their fees on it. And those fees have to be accurate because they are going to stay the same unless the loan amount changes, or because of the appraisal or something like that, or some renegotiation happens. Those fees have to stay the same from start to finish. So just like our fees need to stay the same. Our fees cannot increase unless at the beginning we're floating the rate, and then something happens. Let's say we quote a rate at 6.99 today. From here to 2 or 3 weeks, when they actually get that property, the treasuries and the note rates have increased a little bit. So if they still want that 6.99, maybe it's at a little bit of a cost. That is the only time we can increase our fees is if something happens where we go to lock once they get that property, then that lock has an expense on it. Now for us, whenever we charge points, it's dollar for dollar. We do not charge anything in addition to what Fannie Mae or Freddie Mac charges us. So, Austin's compensation is set. Our fees and our margins are set, and that's by regulation. And we do not. So there are lenders that will tack on margins on top of whatever Fannie Mae and Freddie Mac charges, but we do not. So if I quoted a 6.99 today on a pre-approval, and then it takes them a month to get a house, and then now that same exact program, same rate, maybe it's a little higher loan amount or something like that, is at 7.25%, for instance. And they tell me, oh, I want the 6.99. How much does it cost me to get down to the 6.99? Oh, okay. I run it through the Fannie Mae system, and Fannie Mae tells me it costs you 0.546% of the loan amount. And that is exactly what we will charge. We do not tack on any fees on top of that. So that's one benefit of us versus other lenders. Other lenders, especially ones that have net branches down here, and it's a branch of a branch of a branch. They tack on margin on top of margin on top of margin, and that's where their rates start getting a little bit higher. Their fees start getting higher, stuff like that. So those fees at the beginning, we're collecting that within the first 2 to 5 days. Obviously, we're getting as much information from the seller's agents as possible, because we need information from the seller. We got to make sure that they're not, the seller and buyers are not related. We got to make sure it's an arm's length transactions. There's a lot of stuff at the beginning. We do run background checks on buyers. So as soon as it gets into underwriting, the first thing my underwriter is going to do is run a CoreLogic background check on every single buyer. And that background check will come up with a list of family members that have lived in the same houses and stuff like that. We want to make sure that the buyer and sellers are not related. Also that there's no judgments against those buyers or bankruptcies that we don't know about and stuff like that. So all of this stuff, takes time. And it all happens within hours of us receiving that executed contract. So those first 48 to 96 hours are key. So at that point, we're already ordering appraisal. We're already sending out applications. We're not really working with insurance companies yet, but we are working a lot with the title company at the beginning. Obviously, we are ordering the title commitment. They have to order their lien searches. They have to do all of their stuff to get us that closing protection, insurances and letters that we need. Associations is a huge delay for us right now. I would say it is the biggest delay for every loan transaction right now.
It's the white elephant in the room.
Yes.
Mhm.
Yes.
These management companies are getting slower and slower. They're charging more and more for their estoppels and for their questionnaires and stuff like that.
And may I interject here?
course.
It's interesting you said estoppels. You know that estoppels are regulated in the state of Florida, but they don't seem to
Right.
follow that.
Right.
But again, my pet peeve, associations are not regulated in the state of Florida, period. And that's where the problem lies.
Yes. Yeah, so the management companies are the ones that I don't know if they're thinning out, if they you know, if they're doing more with less, but they have gotten to the point where you send out a questionnaire, and we actually do not do the questionnaire. This is going to be one of the points that you're going to help us out with later. That questionnaire we will forward to you and to the buyer, and the buyer, when they do their application for the association, they will need to you know, submit for that questionnaire as well. In most cases, these questionnaires are taking 2 and 3 weeks to get back to us.
Wow.
Yeah, so we need to make sure that those questionnaires are in as early as possible. Another big issue that we are having, so on these questionnaires, 2 to 3 weeks later, when we do finally get them back, there are so many errors on the questionnaire, so many unanswered questions. And in the last 2 years after the Surfside building collapse, we had these questionnaires adjusted to add obviously the 40-year certifications, 20-year certifications. These are all new things that have come out in the last 2 years because of the Surfside building incident. So all of these people need to get these engineering inspections, and we have those questions for those inspections regarding those inspections in our new questionnaires. And these are not questions that we want to ask for our health. These are questions straight from Fannie Mae and Freddie Mac. Those are the ones who oversee all of the insuring of all of these loans for condos. So after 2 or 3 weeks, we get half of the questions unanswered, and these management companies will just cross them out, and they'll put. I've seen that in the last 2 or 3, per attorney counsel or per inside counsel, we do not answer these questions. And if that happens, we will not have a loan. Basically, we would have to deny the loan. And if we were to submit that to Fannie Mae would cancel the entire building from being financed. So we know better. We're a little bit more experienced than that. My girls are a lot more experienced than that. So what we do is we are a pest. We call them every day. We email them every 2 days. Hey, I need this answered. Hey, I need this answered. And we will call and call and call until we get those answers filled out, or we get enough information from something filled out. So that is probably the most time-consuming thing, is dealing with associations and management companies and the insurances for these associations. Nowadays, because the insurances are doubling in price, these management companies are raising the deductibles from 5% to 10%. They are lowering coverages as much as possible because the owners of the units in the building, they don't want to pay more. So they don't want those monthly association bills to be too high, and they have doubled in the last 2 years, the association payments for these condos. And they're probably going to be raising again, because as of January 1st, 2025, they all need to have reserve studies in place, and they need to have sufficient reserves to meet those reserve studies. So every single condo in Florida, this is a brand new state of Florida regulation or law that's coming out January 1st of 2025. So in 6 months, we're going to see a lot of changes and a lot of higher payments on these condo associations. So unfortunately, even more. Yeah. Now, a lot of them have been prepping in advance. So a lot of them did already make their adjustments in 2024. So a lot of these things have been already done. But I want to say it's less than 50% of the condos out there have already done this in expectance of that new law that's coming in January 1st. And there are no extensions to that law. It's January 1st, no matter what. So, and we don't foresee anything changing, you know, because of that Surfside whole issue. A lot of people lost money with all those condos in that building. And I think that there was a partial collapse in another building somewhere else in North Florida or something like that. So all these things. So these associations are getting a little stingy with the deductibles and stuff like that, which do not follow Fannie Mae guidelines. And that's how they're kind of offsetting the raise in reserves with a lower insurance policy and underinsuring the building itself. So we need to be careful with that stuff. You will see a lot of some positive and some negative actions on a lot of buildings in South Florida because of that activity. So associations is key. Another thing we do have, we don't overly get worried about, but we do have some issues with is asset verifications. Obviously, we're in South Florida, and listen, across the country, not everybody wants to declare taxes and stuff like that, and a lot of these foreigners that probably came from Cuba or Colombia or South America or something like that in the last few years, they might not trust the banking system, and they have $20,000 under their mattress in cash.
Literally.
Yeah. So asset verification gets a little bit challenging for us because we do ask for bank statements at the beginning, at the pre-approval stage. But a lot of times, and it doesn't worry us too much because from the time that we pre-approve them to the time that we actually close the file, that is probably one of the last conditions we will see on our condition sheet is verification of EMD or one more bank statement or verification that enough funds are in their bank account in order to close for the down payment and closing costs. When we're pre-approving these people, they're like, no, not the preocupe. We have $20,000 in our bank account, in our mattress, and we are telling them right off the bat, do not deposit cash. For us, cash is bad. And we had one issue on one of the loans that we did recently with you guys. Was it with you or maybe Iyala or something like that? I don't know.
That what?
That they deposited $5,000 in cash. Or maybe it wasn't one of your realtors. Maybe it was another realtor that we had an issue with.
Yeah.
So they deposited cash one day before they sent out the check for the EMD for the earnest money deposit.
Oh.
So then you know, if that happens, obviously, if they have $100 in their bank account and they need to do the deposit, that's not going to work. What we ask is that they get the deposit from a family member. If they have to deposit cash, deposit into somebody else's account. And then that person can give the earnest money deposit as a gift.
That's a gift.
So yeah, so that is very, very important. Cash is bad. And the reason it's bad is because all of these loans are insured by the government. So we have to follow anti-money laundering regulations. So these are on top of all the banking regulations and all that stuff. There are money laundering regulations in our industry, in the financial industry, that we have to abide by. And so we have to source every large deposit that goes into the account outside of the payroll. And if we obviously see a $5,000 or $3,000 deposit, we're going to ask you, hey, what is this from? And if they cannot produce a copy of a check that it's from somebody or for some business purpose or something like that, then we have to back it out. So if they had $100 in their bank account and they deposit $5,000 in cash, and the next day they send out a check for $5,000 for your earnest money deposit, we're going to ask them when we see that bank statement, hey, what was that deposit for $5,000? And it turns out that it's cash. Then in our system, we have to write that account because it's back to $100. That account will have a negative balance of $4,900 in our eyes. So you have to be careful with cash going into your borrower's account. Yes, of course.
What happens with these people that come and buy cash?
Okay, so if they buy cash, obviously they need to have that amount in their bank account.
Oh, okay.
So they should have it, but I mean, they're not financing, so it doesn't really matter to us because they're not financing with us or anybody or anything like that. So if you're buying cash and you have the money in your account, I mean, we say we're buying cash, but technically you're not gonna show up with a couple of suitcases with $500,000 in it.
That was only in the roaring 1920s during Prohibition.
Because if they do show up with suitcases, then the title company is gonna tell them, no, sorry, we cannot accept that. And then they need to deposit it and fill out cash transaction reports.
Like for 6 months or whatever.
Well, we are only gonna ask you for 2 months of bank statements. So in some cases, when they do have, let's say they do have $20,000 under their mattress, they don't have anybody to give it to so that they can get a gift from and stuff like that. What we do is we set it up where we tell them, don't buy it, get it into your account today. They just deposit it all at once, and you need to wait until you find something for, at least a month and a half. Because what we'll do is we will, the 30 days that we're gonna be in that transaction is one bank statement. So we only are going to ask them for the one previous to whenever they got executed. And then during that the whole loan process is another bank statement. So right before closing, we'll ask them for that second one. And we're praying that they deposited those 20,000 before that 1 month, the 1 month before that transaction. So if it doesn't come out in that bank statement that we ask them for, and then we're just waiting for the second bank statement from the application to the closing, then that's fine. So because we only need to season it for 2 months.
Is that typical of lenders, or is that unique to how you do your underwriting?
So that's typical of lenders. Unfortunately, they don't know how to explain stuff like that, or they'll just ask the borrower for the previous 2 months of coverage or of bank statements.
Or 6 months?
Yeah,
Right.
and they have asked for 6 months. And if you go directly to a bank and you submit these bank statements and it's cash, you're out of luck. You have to go. So they deny you. With us, if we need an extra few days, I'm gonna tell you, Marlene, just get me an extension for 2 weeks because we need to source these funds. And even if we're dealing with one particular investor of ours that they've already seen that bank statement and they don't want the loan, then all I have to do is repackage that loan up and send it to another investor, pretty much. So, and we'll get it to a point where it's pretty enough for a Fannie Mae loan. So with us, we have that opportunity where we have multiple investors that we can stick that same exact loan, same exact rate with. So yeah, so it's more about experience than anything else, honestly. It's because any other lender out there, they're gonna ask you for the 2 months, they're gonna submit those 2 months to their underwriter, and the underwriter is gonna ask you for that $20,000 deposit. So for us, we just ask you for 1 month, and in the month that the loan process is going, it'll be a condition on my underwriter's sheet, and we will get it right before closing, and she'll clear the file.
Ray, does that have to do with the fact that First Origin Mortgage Lenders does all their underwriting in-house as opposed to other lenders or mortgage brokers, so our viewers can understand the uniqueness of what you're offering?
It definitely is. There definitely is an advantage to having our own underwriters, even though in our case, our underwriters are subcontracted. They have underwriting licenses, but they're the same underwriters for us every single transaction. So it's not like they vary or anything like that. There aren't too many. Well, there aren't any brokers with a setup like that, because every single broker, all they do is they push paper from one side to another, and they are just a middle person. So they don't fund the deal. They in most cases, they don't even process it for you. So we have our processors in our office looking at these documents, scrubbing everything before it even goes to our underwriters. And then our underwriters will get some stuff, and in some cases we'll say, hey, listen, this doesn't look right. I'm gonna delete it. Get me something cleaner, or something nicer with directly from that bank with the URLs in the bottom and stuff like that. So they help out as well. In any other case, they're not. Every underwriter, once it gets into our investors' hands or these banks, let's say if they're doing a loan with Citibank or Chase, and the Chase underwriter sees something that they don't like, they're gonna deny the file right then and there, and
They're not
And-
gonna
and-
work with you, in
right.
other words, to
Right.
find a solution.
Correct, correct. Yeah. So whereas we will. So if you know, let's say we had a file with Irelis a couple months back.
Mhm.
And we were taking a look at her customer that had 12 months bank statements, and sure, he had a lot of deposits, stuff like that, but there are investors that and non-QM lenders and banks out there that won't take that file because he didn't have sufficient trade lines or credit items, because he has a lot of money, he pays everything in cash, but he only had 3 credit cards and they were all under 12 months. So you know, we had sent them the pre-approval, we scrub it, we start trying to place the file ahead of time, and a lot of these guys were telling me no because the credit wasn't sufficient enough. Even though he had a 700 score or whatever the case might be, it was only 3 open credit cards and they were all 12 months or less. So then, you know, I worked it out so that we can get a what was it, a utility bill. We did a cell phone bill that got that we did a supplement with our credit vendor, and we put a 36-month credit item on credit for him, and that's how we were able to place it with one of our other investors. We also have a very good relationship with our credit agencies. So you know, these other brokers and lenders, they'll use Credco and all that stuff. We use a Premium Credit Bureau that I have been friends with their owners. I've actually done loans for their owner, for the owner of our credit agency. I've done for their executive vice president. They actually refer all of their clients to us, and we have a very good relationship. So if I needed something, I mean, you know, obviously within legal limits and regulations and stuff like that. But if I needed a supplement in an hour, I call them up on their cell phone and they have that supplement for me, and the credit report changed within the hour. So that's key. Whereas if I had any other credit agency or credit company doing my credit fixing and credit stuff, it would take another week in addition to our process here. So yeah, so asset verification, just be careful with cash on hand. Tell them to, you know, I mean, if you're starting that house hunting, they either need to speak to us or speak to their lender to see what their lender wants them to do with that cash ahead of time. Do they deposit it now all at once? And then just do a cash transaction report. It's most likely taxed income that they already had. They're just basically piling it up under their mattress. So it does nothing for them if they do a cash transaction report. I used to be on the banking side. 99% of these cash transaction reports do not get seen by FinCEN. So those reports get sent to FinCEN, it goes into a database, and really it doesn't come out unless you get audited by IRS or something like that. And they don't audit you because of that stuff. So they know that you've been making money for the last 5 years, yeah, and you only have $100 in your account. Obviously, you're gonna have some money somewhere, you know. So a lot of those cash transaction reports, everybody's afraid of them, but most of them did not get seen. So assets, cash, appraisers. I know that the appraisal itself gets ordered within the first few days. And then it's a matter of you guys needing to be a little bit proactive and getting your own comps and having them ready for my appraiser when he goes out there. Now, the appraisers know us, they know who we are, they know who I am, they have my cell phone. We are not supposed to have any direct contact with them, but it doesn't mean that you don't have. So they will contact you or the listing agent directly for access to the house. And what I would recommend is that you guys have several comps ready to go and hand them the paper. And sometimes they've already done their homework and they know that they're going to get, so, you know, they might say, okay, thanks, you know, and maybe not look at them because maybe they know they're going to get the value. But if they're not getting that value, you know, that's where you need to be ready to show them some comparables. So at least 2 or 3 comparables that you think would justify that price, or at least get close to that price. Now, if an appraisal report does come in lower, the first thing that happens to that appraisal report is it goes on my desk. So my processor will put it on my desk. I'm gonna look at those comparables. That is the first thing that happens, most likely before you guys even get that report. And I'm gonna look to see if those adjustments were hit too hard, if he could have if he could have had another comparable. I have access to the MLS. All of my loan officers do, and they're gonna start looking at those comparables as well and seeing, hey, why did he use this one and not that one? So we have most of those questions answered before that report gets to you and the buyer if it comes in lower. Now, one thing we rarely will happen is maybe, online it'll have 1,800 square feet, but when he measures the house, it was really only 1,600 square feet. So, that does happen, especially like the Hialeah area or something like that, where you go based and Hialeah has a lot where actually there's less square footage online, and then when he measures, it's bigger and stuff like that. And then he has to answer the question of, is it legal or not? So little things like that we'll need your help with and answering, and just knowing the property yourself. So as you show it, these are questions that you should be asking the seller anyway, and we'll need your help with later on. But I most of my time on a daily basis is spent fighting with appraisers and fighting with my underwriters. So I try to get those appraised values for us. And I know better, so I also go to bat for them, because there are instances where these listing agents or the sellers think their house is worth something and it's really not worth something. And then you guys are just submitting an offer because there's nothing else out there. And when we go and do the comparables, it comes in $30,000 less. Now, if I think that my guy was too conservative, then we will pay for a second appraisal. So if we make an argument and my guy is still no, I'll pay for, I'm happy to pay for a second appraisal. It's going to be done by a different person that they don't communicate, because my guys don't know who they are. I only have 5 or 6 appraisers, but they don't communicate with each other. And if that second appraisal comes in $15,000 higher, $20,000 higher, we'll use that appraisal. Whereas everywhere else, if you get one appraisal done, first of all, they don't want to take the expense to do a second appraisal. But they just won't allow a second appraisal. It is what it is. That one appraisal is it. And if that guy doesn't want to change his mind on pricing or adjustments, then there's nothing you can do. So we go a little bit above and beyond. Inspectors, obviously we have to get the inspection report from you guys after 10 days, because we got to get, and not because of our loan process. So we don't want to see it if there's leaks and stuff like that on there, but we don't need it for our loan itself. We need it to help the buyer get insurance. And obviously if there's if an inspector, we had a presentation we went to that we had in our office with an inspection company. If the house has no active leaks, but it's a 30-year-old roof, because nowadays Citizens requires you after 25 years, no matter what, it could be a brand new looking roof, they're going to tell you that you need to change it. With the exception of an inspector going out there and putting life expectancy on it. So if it used to be 3 years of life expectancy, now they're going up to 5 years of life expectancy. So even if he puts on his report, and I've seen some inspectors that are just on that line, and they'll put 0 because it's past 25 years and they know Citizens doesn't do it. But I fight with them all the time, and I ask them, are there any active leaks? Is the roof in good condition? I saw a drone. I have a roof in one of my properties that we took a drone up there for Citizens. We told them no active leaks. The roof is in good condition. We maintain it every 6 years. It doesn't need a new roof, and I got two inspections to prove it, and I finally, they gave me insurance. But yeah, so some of these inspectors will put 0 life expectancy or 3 years, and now that it has to be, I believe, a minimum of 5 years or 6 years of life expectancy. So otherwise, we will have some issues getting insurance for that house. So that's one of the biggest deterrents now, with all these roofs and new roofs needing. Oh, thank you. um, employers, eh, employment verification is going to start to happen within the first 2 weeks. So as soon as we get pay stubs, as soon as we get W-2s, obviously the buyers are going to give us pay stubs. Sometimes they are outdated because they're over 30 days old. We'll need new ones. But basically within the first 5 to 10 business days, we are reaching out to their employer and doing employment verifications. That and that has proven to be a little bit more time constrained recently, because of these employers are just they're cutting down on their HR departments. They're submitting just numbers to the work number. There's a website called the work number that everybody just submits payroll numbers to, and then we have to go there with their salary key and do the employment verification. However, a lot of these employers are submitting not false, but bad information. So some income will come up as, instead of base pay, it'll come up as other income. So then we have to work with these employers, and in some cases, it's taken 3-4 weeks for us to get accurate numbers back from their payroll departments, because the payroll department is in India, or it's some virtual company, and they don't have access to any kind of phone to speak to us online. So that's another. So associations, employers, and then asset verifications are probably the 3 main things that will delay the underwriting process. Title companies, obviously, if there's at about the 2-week mark, we should be getting all of the title reports back. So the title commitments, and that's where I know that a couple of you have contacted me because you've had issues with other lenders because of liens and stuff like that, or violations that have to be listed on the title commitment. And as soon as my underwriter sees that, she's going to basically deny the file because of inadequate collateral. The property just won't, if there are too many violations and to the point where it has to, that it's already filed as a lien, then we won't be able to do the financing on it. There's no way anybody will lend money on that, unfortunately. Now, there are violations prior to them becoming liens that will be exempt from being on that list on the title commitment. So if it's not registered as a lien, then the title company has to tell us that there's violations. I'm not going to submit those violations, because if it's not on the report, why am I going to freak anybody out? Okay. Now the buyer needs to know. So obviously title company needs to let the buyer know that, hey, there are violations which can be liens later, and the buyer will have to speak to the county or whatever the permitting agency is, and most likely sign a hold harmless agreement at closing, and we will accept them. So as long as the buyer takes responsibility for those liens, for the violations prior to them becoming liens. Once they are liens, then we're done. And primarily, and it's not because we don't think that the buyer is going to fix them or anything like that, but it's because of the lien position. So we are doing a loan that has to be in first lien position as a mortgage. If there are other liens recorded already, those liens will take precedence. So they will be above our first mortgage lien. So that is why if it gets to that point, if it hasn't gotten to a lien point, then we can do the loan, no problem. I'm not going to submit anything to my underwriter that says anything about any violations. So, but we do have to alert the buyer, hey, you're getting into this, and it could be dangerous, And if they think that they're enough of a handyman that they can fix it and correct it, then it's on them. And you always want to make sure as a realtor, and for your sake and our sake, because in the 30 years, there has been 1 or 2 that have come back and been like, you never told me about these violations. How did you sell me this house? So you want to put it in an email. It doesn't, you don't want it to be a phone call and say, hey, there's violations. Are you okay with it? So and that's why we also have them sign a hold harmless agreement at closing, to protect the title company, us, and you guys as realtors, because the realtors are the first ones that are going to be called to get sued.
Right. I wanted to come back to employers for a moment.
Mhm.
A W-2 employee is
Hmm.
easy. What happens when it's a 1099 employee or self-employed individual? The dynamics change, correct?
Yes. Okay, so when they're self-employed, obviously our employment verification is the IRS. So we have to coordinate with the IRS and ordering transcripts from them. And their income is based off the net income. And there are worksheets that we do, and there's stuff that we can add back into their income, like such as depreciation. Depreciation for us is our friend, because that is dollar for dollar
Business
income for
miles.
us. Yeah. I actually had a guy yesterday call me because he got declined by another lender, a bank. He's a Canadian living down here. So he has a business down here, but he needs to declare zero. Otherwise, in Canada, they will tax him like 45% or something like that of the foreign income that he makes.
Mm.
So I was asking him questions, and everybody has denied him. And I said, but did you ever submit your tax returns to any of those lenders? He says, no, I never did. But I said, well, how do you write them off? And when he sent them to me, he writes them off to get to zero as depreciation. So the guy makes $197,000. He owns an IT and technology company where he has a lot of inventory. They do a software. They do a lot of software, whatever. So he's got a lot of stuff that he writes off. So pretty much at the end of the year, he writes off $190,000 in depreciation. I said, okay, I'm good. In my eyes, you make $190,000 a year because that depreciation I use dollar for dollar as income. So that is my income for him. So I was able to approve him for a $500,000 loan. So yeah, so others don't understand that, and they'll look at net income at the end of the day. No, it's we bring in a lot of different things. So and that's another thing where experience comes in. Now for W-2 employees, we run into a lot of problems with nurses and shift differentials and things like that. Because these hospitals report their base pay as, let's say, 42,000, but they really make 70,000 because they work night shift or something like that. But their base pay is 42, and then it'll say other income $30,000 because of all the differentials. We will need explanations for, because it's being reported as just other income. We need to be able to explain it. So that's where we run into issues where Calling Baptist and their people don't call us back, or Memorial. We actually just closed one with Memorial, and we needed that. Where it took us over 3 weeks to finally get one letter from somebody saying what other income was. So and it's not what they make, because we see the numbers. It just says other income, so we don't know what it's for. We need to make sure that income is going to continue. So if it's differential, we will see that they've been getting it for the last couple of years, and we have to make sure that they will be receiving it for the next couple of years. So that is the key. So did that answer your question, or?
Yes, yes.
Will that happen also like with the hotel business, restaurant, like where they make tips and things like that?
Yes, so there are different regulations for every single thing. So tips, bonuses, overtime, and other income, all of those fall into different categories. All of those have to be averaged out over 1 or 2 year periods. So commissions, a car salesman, they'll receive a draw, and they're or they have a salary plus commission. We basically will average out their salary, we'll average out their commission separately, and sometimes just because they made $96,000 last year selling cars doesn't mean they're 96,000. So we have to do it over a period of 2 years. In the case where tips, we have to do it over a period of 2 years. So they'll usually make $4 an hour because they have a much lower hourly, and then they unfortunately will have to declare their tips. So their W-2 has a section for their tip wages, and that is what we will average out for 2 years. If they didn't declare it, unfortunately, because I do know several bartenders that work at higher end resorts, and they'll make over $100,000, but they will only declare, 15,000 in base income and then $30,000 in tips. Because their cash tips, they don't declare it. They only declare whatever you put on a credit card that went to the company, and then the company has to put it in their pay. So, but a lot of times they'll have, those are actually the ones with the $20,000 in cash under their mattress. Them and truck drivers. So, which I don't know why, truck drivers have $20,000 in cash under their mattress, but they do.
And it happens over and over again, huh?
Yes, but tip income is generally one of those where we have issues with asset verification, and in some cases, their employment verifications, because they have to actually declare those tips for us to use it. So on W-2 wage earners, so these are people that work for somebody else. They're not their own self-employed individuals. They're not subcontracted. They are wage earners. We take their gross income. It's not their net take-home income. It's based on their gross. That's their qualifying factor. Okay. Whereas self-employed individuals, we take their net income. So yeah. I don't know if I have any other questions right now
Maybe we
on
can open some questions to our, I think Iyala had a question. Okay, Iyala, are you there?
Yes, I'm here. Hi, how are you?
Hi.
Sorry, I'm not in the camera because my daughter is sick and I'm here with her. I have a question. I have a buyer right now that I was with her for 2 years, and now we are in a process with another lender because we started with that lender more than a year ago and I didn't know right.
Okay.
Then she started receiving alerts. She started receiving calls as soon as she started the application when we got into contract. And she put an alert with the los buros de crédito.
Right.
We are ready for the clear to close. Y ahora estamos en peligro porque el loan commitment, loan approval lo tengo para mañana.
Right.
Pero hemos tratado de quitar esas alertas de fraude y en Experian no se puede hablar con nadie. Lo mandamos por correo, lo mandamos online. Hicimos como ella quitó el fraude, la alerta de fraude hace 2 días y todavía nada. ¿Algún consejo de qué pudiéramos hacer en estos casos cuando ya estamos al final del proceso y ocurren estas cosas que por lo menos a mí con todos los compradores que he trabajado nunca me había pasado?
Pero ella tuvo fraude? Did she have fraud on her?
No, ella pensó que había algún problema cuando comenzó. Una vez que entramos en contrato y ella firmó la aplicación, la empezaron a llamar varios lenders. Ella pensó que había algún problema y en vez de preguntar puso una alerta de fraude.
So esto es lo que pasa. This is what happens at the beginning when we do a pre-approval. And there are lenders and smaller brokers and stuff like that. They might not have, the financials to be able to spend a little bit more money on credit reporting or pulling credits. So in First Origin's case, we do a soft pull. A soft pull will not put an inquiry on your buyer. Every other lender that I know of, they don't do this. They don't, because it does cost us a little bit extra to do the soft pull at the beginning, just to see what their credit scores are. And our system will allow us to run a DU with a soft pull. The other competitors out there, they will do a hard pull. As soon as they do a hard pull, all of these other lenders will start calling, because the credit bureaus themselves, all 3 of them sell trigger leads. So they're selling leads to other lenders and lenders like me to call you up or your buyer up because they just got pulled by another mortgage company and to see if they want to see other numbers. So that's what happens. So we actually do a soft pull at the beginning, and we will opt them out of any trigger leads for the next 5 years right away. So that by the time you get around to doing the offer and everything like that, we'll have a DU ready for you. We'll have everything ready for you. They have already been opted out of receiving those calls. And then at that point, we do, at the application, we do our hard pull. And then there's no inquiries on their credit. There's no, the points don't go down. But if she put in your question, if you put an alert, that shouldn't have anything to do with your loan commitment or your loan approval. Unless
because it was the consumer who put it, not a vendor.
Es ya al
But
final del proceso, eso es lo que no entiendo. ¿Por qué me está evitando? La loan officer me explica que es que el underwriter quiere hacer un review del crédito de nuevo. Eso es lo que no entiendo si ya estábamos para el clear.
Okay. Okay, so yeah, so 5 days before closing, we do a credit refresh.
Eso mismo, un
Um,
credit
that
refresh.
that yeah, that will have that it'll update the balances in the credit cards. It doesn't update the scores or anything like that, and it doesn't do a full inquiry. It's not a hard pull. It's just a credit refresh that updates the balances. And that credit alert might deter them from doing that.
Mm,
So por eso a lo mejor le están pidiendo que quite el alert ese.
es lo que ha sido en el mismo momento de la fecha ya del loan approval. O sea, nunca,
Pero
no hay más nada que se pueda hacer, ¿no?
no, I mean, unless they're giving you the runaround and using that as an excuse.
No, es que es real. Yo misma he llamado con la información. O sea, ella ha estado conmigo, hemos llamado y la alerta todavía está. No
Pero
se la han
ya
quitado la alerta
todas
de fraude.
las otras condiciones y
El
todo
único
eso.
buró que la tiene es Experian, es el único que la tiene, pero no la ha quitado.
Yeah. Y las otras condiciones ya están cleared. Everything is cleared.
Todo lo demás está clear.
Oh, okay. Pero Experian, I'm surprised because they're not that bad. They do have a 1-800 number. Y sí hay personas that you can call.
Bueno, vamos a tratar eso de nuevo. Y otra preguntita rapidita para darle a los demás.
Ujú.
Yo tengo un lead que sí me gustaría que lo trabajaran ustedes, que él tiene todo bien, todo bien. Lo que pasa que su crédito está en los 6 y pico bajito porque tiene un collection de hospital de $3,000
Ujú.
de hace 3, 4 años. Él es un ingeniero de aviación. El problema es que cuando nosotros llamamos al collection company, estábamos tratando de ayudarlo. Ahí dicen que lo pague, pero el que lo pague no me determina que le hagan un delete del crédito. No sé qué opinión tendrían ustedes al respecto.
Pero bueno, es un medical credit item. Porque
Sí,
si en el buró de crédito de nosotros, when we do the credit pull, and if it says medical on it, we do not care. We won't make him pay it off. Yeah, we ignore all medical items.
ok, entonces le voy a mandar el número
Okay.
a ustedes
Yeah,
para que
so
puedan
a lo
conversar.
mejor le puedo ahorrarle un poquito de dinero. Ahora, si es otra cosa, let's say una cosa in credit that one thing that we are seeing a lot of, maybe 10 years ago, a person had a repo. These repos are not coming off your credit. And that was some kind of regulation o algo así que pasó hace como 15 años, that the repossessed vehicles, the banks will stay with them, and the collection agencies, if they were repos, they won't come off your credit. So if we have a case where there is a repossession and entonces there's a balance of $7,000 or something like that, a lot of times DU or Fannie Mae, Freddie Mac, FHA, they're going to make you want to pay it off. What we do is we'll have your buyer call the bank that repo was with or the collection agency, and then we would just tell them to get into a payment plan. And you're going to tell that bank or credit agency that they can only afford $25 a month or $50 a month, and instead of paying the whole thing off. And as long as you give me and they'll probably ask them to make one payment. So let's say you get into a payment for $50 a month. It's a $9,000 repo charge off. And you give me something that says you have entered into a $50 a month payment plan, that is what I'm going to use for your debt to income ratios. And I will not force them to pay that whole debt off. So that also saves people money, because I've seen mortgage brokers and these lenders, they don't go the extra mile, and then they tell you, oh, you have to call and settle it or pay half or pay the whole thing or whatever. I have you do a payment plan, $25, $50. You make one payment, we close in 2 weeks. And then if you don't make another payment after that, it's not my problem.
That's fine. You don't know who you're on.
Ok, perfecto. Entonces yo le voy a pasar el contacto a Austin.
Okay,
Muchas
perfect.
gracias.
No, por
Great.
nada.
So, Nobody has any other questions? I think
Any-
we're done for today, right?
Yeah,
Do you
we're-
wanna do any closing remarks here?
This is what we do to
No.
expedite,
Yeah.
you know,
Okay.
build relationship with title companies. We love Title Logic. We love every, you know, our basic title people we use, like Hemisphere and Butler Title. They're great too.
Oh, and Sanchez and Vadilla is also amazing.
Mhm.
Yeah, so we do build a lot of relationship with title companies. We know what they need, they know what we need. So a lot of these South Florida title companies we've worked with, we've
Right.
probably done several loans with each and every one of them. We do have insurance agents that are ready to quote insurances, and these people, they're not affiliated with us. They don't give us anything. They don't give you anything. Like they are just they get so much business from us, and all we want in return is service. So within an hour, they're calling your client. Within 24 hours, they have a quote, and then when we need a bound, they'll do that within the hour. Pretty much, it just makes the process, the whole underwriting process, that much quicker. And then that with our experienced loan originators, with me being on top of them and cracking the whip every single day.
Training and sales meetings. Being experienced loan originator is what's gonna help us, right, anticipate conditions, right? So that way we don't have, any problems in the future and we're trying to figure them out before we even get the conditional approval, right? So that's why we ask you guys for all the documentation up front and we put the whole puzzle piece together and we anticipate everything for the future, right?
Perfect. Work
And
as a
then
team.
We already
Yeah,
talked about
yeah.
this,
Yeah,
being
being proactive.
proactive, helping
Helping us getting documentation is
assistance
huge.
with associations, and then communication. We'd love to talk to you guys. So go ahead and text us whenever you guys want. No problem. All right. We'll answer whenever you guys text us, okay?
Although I will tell you, if we have, let's say, one small delay at 5 p.m. on yesterday, Tuesday, and then I'm getting into the office at 9 o'clock in the morning, and then you're calling me saying, "Hey, is there anything new?" I'm like, from 5 p.m. yesterday to 9
Yeah.
o'clock in the morning, nothing's gonna change.
Yeah, because I mean, we don't stop working, but other people do. You know what I mean? So if we order the appraisal later in the afternoon, chances are it's gonna get scheduled the next day, right? It's not gonna get scheduled the day of. That's normal stuff. Q&A. We just answered a couple questions there. Do you guys have any questions or?
Any other questions that you guys want us to answer?
And if anything, feel free to text us, call us with questions. We'll answer, no problem.
Mhm. Well, great. This has been a great presentation. Thank you, thank you, thank you.
Yes. Miami,
Canvas
Miami
Real
Lakes, Miami
Estate,
Lakes.
Miami Lakes. We want to make sure that Miami Lakes is front and center with us, with our clients, and with First Origin mortgage lenders. So thank you one more time. Does anybody have any questions before we wrap up? Andrea, Nidio just started with us yesterday. Nidio, I hope you enjoyed the class. Carlos Alberto from Punta Gorda as well.
Que nos manden marketing material. We're gonna post it with that
Okay.
new
Okay.
program.
We're gonna come out with the conventional 100 now flyer. So
Oh, okay, so we're gonna go ahead and send that.
Yeah.
I like your fuchsia lighting you got going on there.
My daughter.
Oh, okay, I hope she feels better. Okay, thank you, everybody. As always, remember that we actually put this online. Let me make sure that I stop the recording here. If I can see, I can't see. Bear with me a second. Here we go. Okay, until next week, the crew here at Canvas Real Estate Miami Lakes and First Origin Mortgage Lenders want to thank you and enjoy your Memorial Day weekend.
yeah.
Ciao, ciao. See you soon.